Welcome to Dollars and Cents with Friedman Financial, the home for financial advice in a language you can understand. Created by Mark Friedman of Friedman Financial, he and his team of certified financial planner professionals will discuss timely topics that help individuals and families make smart financial decisions. And now, get ready for this week's edition of Dollars and Cents with Friedman Financial.
Welcome back to another edition of Dollars and Cents, where we provide you with financial advice in a language you can understand. We're here each and every week to do so. My name is Marion Gilman.
And I'm Christian Kircher.
And we're with Friedman Financial, if you don't know yet. But we are located in Peabody, right above Daniela's restaurant.
Yes, overlooking the Macy's parking lot. Very exciting view.
Yep, the mall looks great. But in reality, since it is spring, there are these absolutely gorgeous plants starting to flower around here. So it's all great right now.
That is right. My garlic is coming out of the garden. I'm very excited.
Wow, that's delicious.
It's
Isn't
very
that
exciting.
Wonderful? Yeah.
Yes, and then once you grow it one time, you can just use the head of garlic to grow it the next year and the next year. And so it is perpetual.
Isn't that wonderful?
Nature finds a way.
I will tell you, I am definitely not a gardener. I love plants. I love flowers. I love all of that. But my husband actually does all the gardening.
Right, so. And that's why we've got someone who comes in and takes care of the plants in the office.
Yes,
that none of us have to be the ones to kill them.
We don't really have green thumbs around here. Or we just get distracted and don't do any of it. So, there you go. In any event, we are here to talk a little bit about finances, financial planning, which is what we do each and every day in this office. So Christian and I had the opportunity today to go to a very interesting luncheon with JP Morgan, and we do this every quarter. They hold this meeting, and you know what? They just provide us with some insight into what's going on in the economy, what's going on in the markets, what their perspective is. So it's one firm's perspective. Several analysts contribute to this, but it's always enlightening for us. Because many times there's no rhyme or reason that the market does what it does. We see that each and every day. However, they do try to provide some insight and some greater depth and perspective. So we thought we would share a little bit of this with you today so that you can hear what's going on out there.
Absolutely. And the best part of these lunches is it's not
the lunch.
Well, definitely not the lunch. But it's getting not just the perspective, but also some real data and information. Because so many people, when they're trying to figure out, okay, how is the economy doing? You're not going to look at the numbers. You might see a headline number on CNBC or the Wall Street Journal or wherever you're looking. But very rarely do you get granular in the numbers to where people are explaining what's going on. Instead, people often view their own, the way that the economy is running based on their own experience, what they hear from others, what they see online and in the media. And so that picture can be very different than what is going on. And it creates a disconnect where there are many times where people will come in and say, the economy is doing really badly, but for some reason, the market's at an all-time high, my portfolio is doing well, I don't understand. And it can lead to some bad decisions because people will say, well, this cannot continue. Certainly, the economy that I'm seeing when I talk to friends or family or things I see online will eventually catch up with the stock market.
That's right. And meaning that they expect the market to decline because they're seeing negatives out there. And yes, it is very difficult for some people to find jobs. It's very difficult when you're struggling with, let's say, student loans or, high mortgage rates or whatever that might be. On the other hand, when you look at the economy overall and you step back and get a perspective of everything that's going on, I think some of the market movements make a lot more sense. Although, do remember as well that people's sentiment enter into the market movements very frequently. So it's not always reality that's showing up in market movements. Sometimes it's just how people feel.
That's right.
But we got some interesting facts about sentiment today, and
Sure.
maybe you could explain a little bit about what sentiment is and how it's measured.
Yeah, so sentiment is how people are feeling about the economy. So there's a poll that's been out for 55 years at this point from
Yep.
the University of Michigan. That's kind of the gold standard of these sentiment ratings. And so they measure this every month, and they ask just 5 questions to the people that they're polling, all trying to gauge how people feel about their current financial situation and the general economy overall around them. So some of these questions include things like, would you say that you and your family are better off or worse off than you were a year before?
Right.
The second question would be, do you think a year from now you will be better off or worse off? A good question.
Yep,
And the listeners at home can kind of answer that question for themselves.
Yes, exactly. Think about that from your perspective. How do you feel relative to last year? Have you made progress or not? And then what is your expectation for the year to come? A lot of people don't know this because they don't know whether they're going to continue to have a great job. If they have a job now, they don't know if they're getting another job. However, when you poll numerous people out there, they get an average sentiment.
That's right.
Yeah.
And so you get the sense of what these questions are from just the first 2. And what's really fascinating is this poll has essentially been broken since 2020. Not that the data is incorrect, but it has been overwhelmingly negative since the pandemic, essentially.
Right.
And so if you actually look at the rating that came out in April of this year, it is one of the lowest ratings in the history, the last 50 years of this thing.
And what's going on in the stock market today? Where are we at?
Well, we are currently at an all-time high, despite the volatility we saw earlier last month with regard to everything going on in the Middle East. And yet people are still so negative. In fact, the 2 worst ratings over the last 50 years, people can look this up and think about, what would you say over the last 50 years? Think about all the things that have happened. You've got the Cuban Missile Crisis. You've got the gas lines. You've got 08, 09, the dot-com bubble, 9/11, all of these. When do you think would be the worst ratings?
I would have thought 09.
Yeah.
March of 09.
Absolutely. And that is one of the lower points here. But the worst 2 on this entire rating is 2022, when inflation was high, and right now.
Well, and I got to say, the interesting thing is when inflation is high, I remember back in the 1980s when inflation was, mortgage rates in the late 1980s were 14%.
Yes.
That was the mortgage rate because inflation was high. And now, mortgage rates back in 2022 were 9% maybe? I don't think they even got that high.
No, I think 7.5%, 8%.
Right, but I think inflation was up around 9.5%.
That's right.
So, relatively speaking, but individuals don't think back that far.
Yeah, meanwhile, through the 80s, when you were talking about this, it's actually an above average rating on the sentiment from the Michigan survey.
which is interesting.
And so it's just fascinating to look at how people are so negative in the current environment, despite there being some positive news. Right. And so
I think you want to think about one thing. So right now, the sentiment rating is at an all-time low. Mm. However, one of the things that we learned today was that this was the past 11 days have been the fastest recovery from a market low to a new all-time high. It took 11 days to go from the low point a few weeks ago, right around wartime, when the war broke out, to, we are now at an all-time high. And the market was down 9%, so it wasn't that big of a decline as it was, let's say, in 2009. However, it was still a decline, and now we are at an all-time high. So amazing. 11 days.
It truly is.
Right. And so think about that. When the sentiment is the lowest right now, people are thinking, oh my God, the market's going to go down. It's going to, and 2 weeks ago, people thought the market was going to continue to go down. They didn't want to invest. But guess what? That's not what happened.
Yeah, one of the biggest takeaways from this sentiment survey is, in fact, when the sentiment is peaking and people are the most optimistic, the average 12-month return of the S&P 500 index after that peak in excitement and sentiment is just 4.8%.
And what is it from the low?
From the lows. If you look
he also gave us that statistic when sentiment is at its lowest.
When sentiment is at its lowest, the 9 different troughs they've had over the past 50 years, the average return 12 months following is 24%.
So, I guess you got to think about, I think it was Warren Buffett who always said, be greedy when others are fearful, and be fearful when others are greedy. So in any event, think about that. We are at a very low point. Everybody's fearful. Now is the time to say, okay, you know what? Maybe life is not so bad. Maybe the economy is still positive. And as a matter of fact, we did learn that today, that the market has been, the economy has been growing. It has not been negative. Although we have seen some negative statistics along the way for certain categories, overall, the economy is growing. Economic growth is there. It is not negative.
And particularly as an investor in the stock market, the
Correct.
thing that some people will look at everything going on in the world and say, how is the stock market at an all-time high? And realistically, there's a million different factors that go into it, but the thing that drives stock prices the most is how much those companies are earning, their
Right.
earnings, and how much those earnings are growing.
Right.
And the other stat provided today was that we have gone now 5 quarters where the average company in the United States has had double-digit earnings growth, which means the money that they make after all of their expenses has grown double digits year over year for over 5 quarters, so more than a year.
So that is significant. That is a significant statistic. And you want to remember that because there is a certain amount of momentum as well with companies that if their earnings growth is positive and things are still looking positive for them, they will continue to grow. That will continue over time. And the expectation from the analysts at JP Morgan, and our expectation as well, I do think we agree with them, is that we will see positive economic growth this year. Potentially not as high as the past couple of years, but that's okay. We're still expecting economic growth in the neighborhood of, let's say, 1.8 to 2%, which is a very respectable earnings growth.
Right. And reasonable growth is actually the sweet spot. When you're
Yes.
approaching and entering into retirement, you don't want something where the economy is blowing the roof off.
Right.
Because
guess
what goes up occasionally comes down, especially
Right.
with the economy. It goes in cycles. And so having a reasonable amount of growth
Right.
is actually really sustainable for your retirement plans.
Yes. And the other thing that was pointed out to us today is small companies are growing, have now changed status with larger companies. So over the past couple of years, it was the large companies and particularly large growth that were outperforming. Now it's small companies that are actually starting to grow even more, which is good for the economy as well and good for small businesses and good for hiring as well. So we're very positive on what's going on, and we're hoping that you are too, and you stay positive and stay rational in these somewhat turbulent times. Don't listen to the news. Look at the statistics and take it from the actual concrete numbers out there, because those are the facts. So in any event, if now's the time for you to get serious about your money and you want to talk to somebody about it, please feel free to give us a call, 978-531-8108. That's 978-531-8108. Or you can visit us on the World Wide Web, friedmanfinancial.com. That's Friedman.
2 E's and a D.
Financial.com. You can also sign up for our weekly newsletter that comes out at 10:30 every Friday morning. And that we've been doing since March of 2009, that low point in the market. So consistently every Friday morning, Go to any web page, scroll down to the bottom of the page, put in your email address, and we will put you on our newsletter list. So that'll do it for us today, Christian. Thanks for being here.
Of course.
Thanks for providing all that information. And have a wonderful week, everyone.
Yes, see you next week.
Enjoy.
During today's episode of Dollars and Cents with Friedman Financial, your host may have discussed specific financial planning and investment ideas that are for general information only and not intended to provide specific advice or recommendations. Please remember that investing involves risk and may include loss of principal. Always consult a certified financial planner professional, qualified attorney, or tax advisor prior to investing to determine what is appropriate for you. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.